though has passed it on and communicated that it should be effective on the 1st of, I think, is it July now? Yes, 2024. It's still not effective yet because of the gazette that has not been done on it. So, but then doesn't mean that we should not have the background of what has been said there. Now, there's a big misconception that people have about withholding tax. People think that withholding tax is a type of tax on its own, but it's actually wrong. Withholding tax is an advance payment, and that brings us to the definition of withholding tax. So, withholding tax is, like I put it, there is a government mandated deduction taken from an individual or entity's income, such as wages, interest, dividend payment, blah 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 blah, before the income is paid out. So, and then this tax is withheld, but I'm going to try to share this slide with us. So, withholding tax is an additional, whether income tax, whether it is petroleum profit tax, whether it is company income tax, irrespective of the income, you are supposed to pay a tax on it. So that income type will determine the tax type. So if you are earning personal income, that is your personal income or your salary that you earn, of course you pay the personal income tax. If you are earning income from company, corporate entity, you pay what we call the company income tax. If it's on petroleum services that you are rendering or petroleum profit, then you pay what we call a petroleum profit tax. Now, these taxes are paid mostly once in a year, right? Except for payee that is paid on a monthly basis. Others are paid once in a year, and it's income. So, or maybe where you have arrangement to pay it in installments. So, but majorly they're paid once in a year because you determine your actual profit at the end of the FY, at the end of the financial year. Now, the government cannot wait and say, oh, we have to wait till June when people will be fine before we can have money to spend on infrastructure, on development and other things, right? So the government cannot wait for that period. And that is why the concept of withholding tax comes in. Withholding tax means that they are collecting that money from your income in advance. So when you are supposed to say, let's say your total profit for the year is 100 million naira, and then you are a large company, you're supposed to pay with CIT of 30%. Let's assume that that's the net after you have done your capital allowance and everything. Your taxable profit is 100 million. You're supposed to pay 30% of it. That's like 30 million naira. Now, what the authority now says, instead of us waiting for us to collect that 30 million naira next year, why don't we initiate what's called withholding tax, where we can be collecting the money in installment on a monthly basis from you. Now, they will not collect it directly from you. They will collect it from you through your vendors and suppliers and possibly your customers. So when, for example, if I sell anything to you now, I tell you, okay, withholding tax is 5%, I'm going to deduct it. So part of your money I'm supposed to pay you, I've deducted it and remitted it to the government. What that person is doing is that money that you are deducting and remitting to the government is part of your tax that you're supposed to pay at the end of the year. But you've already collected it in advance. That's why they call it withholding tax. And if you now look at the definition of withholding tax, it now says it's an advance payment of income tax. Right? So the withholding tax has been collected in advance. Your income tax has been collected in advance. And that is what eventually translates to what we call withholding tax. At the end of the year, the total of all the withholding tax that has been collected from you, we now pull them together and call them withholding tax credit. So the total withholding tax has been collected from you becomes what we call withholding tax credit. Now that withholding tax credit, when you now get to, let's say, because they've been collecting 5 million a year, 10 million a year, 2 million a year, 1 million a year, 3 million a year, at the end of the year, you have like 50 million naira worth of withholding tax credit. By the time you have to pay your CIT, your actual CIT that you should pay is 30 million. What now happens is that you now use that withholding tax credit to offset the CIT payable. Since withholding tax is actually an advance payment of your income tax in the first place. So you use the withholding tax credit you have to offset the CIT payable. And that means that you now be in a credit position of 20 million. Let's assume that you already have withholding tax credit worth of 50 million. And then you have CIT payable of 30 million. Then your balance is 20 million. You have that one, you keep it in your account. for the next year that you want to use it. But in another case, maybe the actual withholding tax credit you have is 10 million naira and your CIT payable for the year is 30 million. What you just have to be is the difference in the two. That means your current CIT payable minus your withholding tax credit that you have, whatever balance it is what you will now pay. So that is the purpose of withholding tax. It's just to collect the money in advance so that government can have a running expense, what we call as working capital, to continue to operate while they are waiting for you to pay your actual tax. So at the end of the day, it's either you pay more or you have your credit there to be used in the future. Right? That just gives us a background of what withholding tax is. So withholding tax in itself is not a tax, but it's an advance payment of your income tax. And that is why we don't have withholding tax law. We don't have an act that says withholding tax act. We have company income tax act. We have personal income tax act. We have VAT act. You cannot see withholding tax act. We only have withholding tax regulation and guidelines because withholding tax is a part of those different acts. So if you go to personal income tax, under personal income tax, we have withholding tax section. Under company income tax, we have withholding tax section. Under petroleum profit tax, so we have it like that. And that's what brings us to the framework. So the regulatory framework for withholding tax in Nigeria is governed by various laws and regulations, which primarily includes company income tax, petroleum profit tax, personal income tax, and then we have the FRS Establishment Act, right? So moving on, who are the people required to make these deductions for withholding tax? Ideally, every persons operating in Nigeria are required to deduct withholding tax. So what the regulation has now done is to help streamline it such that small businesses, right? Since we are saying we are trying to promote the growth of small businesses in Nigeria, what this new regulation has now done is to help those small businesses to escape having the burden of withholding tax again, or possibly what I would say, reducing the burden for them. So if I say I'm withholding from you again in the first place, do you understand? So when I say, I think there's one background noise coming from somewhere. Yeah, it has stopped now. Yeah, thank you very much. So when I say withholding tax is an advance payment of income tax, and as a small business, I don't even have to pay income tax because my CIT is 0%. If you look at section 40 of CETA, the CIT I'm supposed to pay is 0%. So why are you withholding from me again in the first place? That means I'll just be having withholding tax credit that I'm not going to utilize. So that is part of the things that this regulation is trying to correct by putting some things in place regarding the withholding tax. So, like I said, the purpose of the call is just to give us an insight into the regulation so that when it's eventually signed and gazetted, we can now apply it, and then for the knowledge of people that need to know this about this. So let me move to the next one. So we have persons required to make decisions. We have corporate entities. We have government parastatals. Yeah, I can hear you. No. So you need to no, we have not. So if you look at the part down here, can you see this part where I put exemption? So I'm still explaining this part. When I get to that place, I'm going to explain further to you. I'm only giving you the concept behind why this withholding tax regulation was released, right? Because prior to now, small businesses that are supposed to enjoy the benefit of not paying taxes, they are still paying withholding tax. And that withholding tax would not eventually be utilized because they are not supposed to pay CIT. So it's like I see they are still paying that CIT in one way or the other. Now, this new regulation has now exempted those companies, but did not explicitly say small companies should not pay withholding tax. No. What the new regulation has now done is I say that a small company in line with section 105 of CETA of CIT Act, if the revenue, they says if they have a valid TIN and the value of transaction in each calendar month is 2 million naira or less, then they are exempted from withholding tax. What that simply says is that if you do the calculation, the law is very smart. If you do your calculation, 2 million naira times 12, how much is that? That would be 24 million. And they said that the minimum, the small companies categories, company with revenue less than how much? Small companies, anybody? Revenue less than how much? No,
25 million.
25
Okay.
million. Yes. So you see that that this is one of the beauty of tax is that you are able to link up everything and start seeing the reason behind what they are doing. So companies with revenue less than 25 million naira are exempted from paying CIT. If those same companies are already paying withholding tax, indirectly they are already paying the CIT. So they now carefully say that if the company cumulatively 2 million naira per month, because they don't want to do 2.5 million, when they do 2.5 million, it will exceed. If they do 2.1 million, it might exceed. So they just do a safe zone. As long as the value of transaction is less than 2 million naira, then in a month, then you don't have any problem to worry about withholding tax. They cannot charge you withholding tax if this law eventually becomes signed, right? However, where the transaction is exceeding 2 million naira in a month, another thing to now look at is that cumulatively from January till date, have I from January till December, this company, if you're going to exceed 25 million naira, if you have projected and you know that you will exceed 25 million naira, then you don't have anything to worry about. Let them charge you withholding tax. It's for your own benefit. You will still deduct it at the end of the day from your CIT, right? So, but just have that at the back of your mind that that's the concept behind this 2 million naira that they put in the withholding tax. So, if you go to the circular that was the regulation that was sent, you see this thing right there like that. So, moving on, we have public persons. Before she asked that question, yeah. So we have body incorporate, we have government, we have statutory bodies, we have public authorities, and all these things that I've listed here, they are all expected to deduct withholding tax from relevant persons, that is, relevant corporate entities or business enterprises. Now, moving on to the next thing. So, who should withholding tax be remitted to? So, this one is just like a general learning, right? But I just need to clarify it again. So transactions with individuals and business enterprise, the withholding tax on such should be remitted to state internal revenue services. Transaction with individuals and business enterprise. I want to believe that all of us know what business enterprise means. Anybody to quickly give us what business, and just in case anybody, not everybody knows it. Anybody to
Business
volunteer to tell us what
businesses own
Partnership.
Business owners, like sole proprietorship or partnership and the likes.
fantastic, yeah, exactly. So proprietorship and partnership businesses. So business run by individuals basically and partnership, right? So people, those businesses are categorized as small, and they are also categorized as business enterprise based on the registration name. So you see, Ade and Sons Enterprise, GD and Co Chartered Accountant. Okay, now let me ask, GD and Co Chartered Accountant, is he a business enterprise? Is he under the category of individual business enterprise or under the category of incorporated entities? GD and Co Chartered Accountants.
Individual.
Okay, so under the category of enterprise.
Business enterprise.
You can also put them under partnership, but
Yay!
all of them are still under business
Under business
enterprise.
enterprise.
Yeah, fantastic. Thank you very much. So, but what if we have Emeka and Sons? Emeka and Sons. Emeka and Sons. Is it a business enterprise corporate entity? Just raise up your hand. Okay, Toyosi says sole proprietor. Fantastic. Okay, so let's just leave it like that. Thank you very much. Timberlane, go ahead, please. Okay. Business, if you charge withholding tax of state internal revenue services on incorporated entities, expected to charge, incorporated entities are those that have limited liability company, PLC, They are supposed to remit those ones to the FIRS, right? Moving on to the next slide. Penalty for non-compliance. So in the line with regulation, of course, there's a penalty for non-compliance. If you don't comply with the law, you would most likely, as the person remitting the tax, maybe you deduct and you not remit, or you fail to remit. Either of the two, you will pay penalty of 10% of the amount and interest and at CBN rate plus 5%. So you don't want to also be exposed to penalty. You need to just carefully check whether you are doing the right thing in your companies. We still have other things that so transactions are exempted from withholding tax. We have a couple of transactions exempted, right? But I'll just encourage us to go and read that circular to have more detailed explanation and breakdown. But I've just selected some of them here. We have one of them is compensation relating to registered security lendings, right? If you look at security lendings, generally they are kind of exempted from withholding tax. We move to look at distribution of dividend payment to real estate investment trusts. These are clearly exempted. Over the counter transactions. So there's a definition in section in the regulation 8 of the withholding tax regulation of 2024. If you go and check it, you see where they wrote it at over the counter transaction. It has always been in the law, in the guideline for withholding tax, even in the clarification provided by FIRS circular 2006 and 2009. Right? Withholding tax on if you go and buy something now. Let me give you why this is exempted so that some of you can relate very well and you can understand. Because I actually have these issues with FIRS guys when you are explaining with tax audits. They argue with you on this. So if you can explain properly like this, you'll be able to win the argument. If you go to the tax authority now, no, I'm saying tax authority, sorry. If you go to the market and you want to buy a generator, let's say you go to Yaba Market, for people that are familiar with Lagos, and you go to Yaba Market, say generator is 400,000 naira. Say, please, I buy 350. Accept 350 from me. Then it's okay, no problem, pay. Then you now tell them, sir, I will withhold them 5% too. What will the person do to you? It's like, are you sure you're okay like this? Right? They will not even sell to you. They just go somewhere else. And I'm sure that you can go to 10 places. None of them will accept you to say you want to withhold from them. That's what we call over the counter transactions. You are going there as a nobody. You are not a supplier, you are nothing. Withhold from them. However, if they are a supplier to you, that is, they constantly supply, or the payment is not going to be immediate, meaning that it's a delayed payment, a kind of supply arrangement, then withholding tax will be applicable. But over the counter transaction, you just go to and buy biscuits from Aboki or Positi and say, how much is biscuit? 700 naira. Okay, I will withhold 5% too. You just be looking at it, what's wrong with this guy? So that is why over the counter transaction is exempt from withholding tax. Majorly because it's also cash transactions sometimes, right? So we also have interest and fee paid on Nigerian bank. So because of this one, they're trying to encourage local banks also. They want to, like, in terms of withholding tax on this interest paid by Nigerian bank via direct debit to domicile in the local bank in Nigeria. So what they're trying to basically do is just to encourage the local banks and also encourage people from, right, patronizing the banks locally. So if you look at international banks now, if you look at some, maybe if you have CCI, certificate of capital importation, right, sometimes on those interest on withholding tax, you see interest on withholding tax being subjected to interest, withholding tax on interest on foreign loans. You see them being charged withholding tax. However, local banks, you see that they are exempted, right? And the purpose of that is just to promote the local banks also. Just you can get some benefits from them and all those things like that, right? So let me see what else. We have goods and materials, good manufactured or materials produced by suppliers. So this one is quite subjective. Let me say the explanation around this is that items that form part of stock in trade, that is, they form raw material to the company that is producing it, as long as you order those raw material directly from the producer, they are exempted from withholding tax. If you order directly from the producer, they are exempted from withholding tax. It's just like a way of encouraging local producing firms too, so that you don't withhold their money, because the profit line is very thin already. So why do I need to withhold again on them? So we also have imported goods where transaction does not create taxable presence in Nigeria. We have a lot of other things, out of pocket expenses. We have insurance premiums. Of course, insurance premium is like you're just insuring something. It's not like a transaction like that. So they kind of exempt it. A lot of other things like that too. We have liquefied petroleum gases. We have compressed natural gases. We have PMS, agro, and the likes. Right? They are all exempted from withholding tax. So yeah, the rates, which is one of the most important parts of this conversation too. So this has helped us to streamline the withholding tax rate. Let me see. Do I have to? Okay, just one. That's the second to the last slide. So we have Withholding Tax Regulation Act, which gave us the new rates. So if you go to Appendix 1 of the Withholding Tax Regulation, you see the rates there. So these are the eligible transaction and applicable rates. For dividend, so if you want to know the ones that changed, before now, we used to have all different rates, right? We have 2.5% for building and construction, road construction, and we have 5% and 10% depending on the particular transaction type. But now we now have more varying rate. We have 2% in some cases, we have 2.5, we have 10%, and we have 15%, we have 20% in some cases, right? So basically, I'm going to give us how to quickly identify what's changed. Go to the section that we have remark. Let me see, where's my mouse? This. Can you still see my screen? If I'm not mistaken. Oh, I think I mistakenly closed the presentation. All right. Okay. You should be able to see it now. All right, good. So we have different rates. We have the so to check the one that's changed, just go to rates remarks, the last column, remarks. You see that they wrote that under dividend interest, rates are specified in the law, meaning that nothing has changed. Dividend for corporate entities is still 10%, for private entity, for individuals 10%, for non-resident 10%. Irrespective of how we do it, it's 10%. Now, moving on to royalties, rates are specified in the law, meaning that nothing has changed. So I'm not going to focus on too much on those that are still the same thing. That's just the fastest way for you to look at it. Just go to that remark. So we have so just residential rent. I'm sorry, party, so withholding taxes. Um, commission. So now we have higher rate funding to serve as final tax. This is under commission, consultancy, technical management. So we have 5% for resident companies and 10% for non-resident corporate entities. So if you look at these rates, we have corporate entities and we have non-corporate entities. So under corporate entity, we now have resident and non-resident. I want to believe that we all know what resident and non-resident means. So just to
Yeah.
summarize, residents are companies that are local companies within Nigeria. Non-residents are, let me say, foreign companies. So it's determined then by economic presence, SCP order. So I don't want to go too deep and technical, but if you're a resident company, local company in Nigeria, with operations fully in Nigeria, and maybe you have external operations outside Nigeria, but at least you are fully registered as a corporate entity in Nigeria, then the corporate resident would apply to you. And if you are an individual, too, same thing, corporate individual resident will apply to you, right? So for this one, the rate changed. higher rate for non-resident to serve as final tax. So we have higher rate for commission as 10%, and also for non-corporate as 10%. So we also have supply of goods and services other than by the manufacturer. Can anybody explain what this means? Based on what we discussed earlier, supply of goods and services material other than by the manufacturer. We have 2%. We have not applicable. We have 2% not applicable. Anybody? Or let me just quickly explain it because of our time. Okay, somebody wants to volunteer. Okay, so you go ahead, please.
Yeah, what I mean by that is, for instance, if you are working in a manufacturing organization and what form part of your stock in trade is raw material. So if you are receiving or you are buying raw materials from another manufacturing companies, that means such transactions will not be subject to withholding tax. That's my understanding about that. So
Yeah,
anything other than
fantastic.
that will be subject to withholding tax.
Fantastic. So, anything exactly what you have explained. So, raw materials. Now, take note. The raw material has to be directly from the producer or from the manufacturer before it can qualify. Once it is coming from a third party, for example, if Dangote Nigeria produces sugar that flour mill uses to produce flour or to produce biscuit, or another company to produce anything, then I'm not saying explicitly is exempted from withholding tax. If let's say me, I have a company now. Let's say Richard Logistics Limited or Richard Packaging Group. If I buy that same raw material from Dangote and I store it in my warehouse, and when Flammy now needs it, I supply it to them. That's no longer a direct producer arrangement. It's now a trading arrangement where me I've already bought it and I'm selling it. So they can withhold on my own because I'm going to be making additional profit on it. But if it's Dangote that is selling directly to that flour mill, in that case, then withholding tax can be exempt because it's directly from the producer. Now you need to also be conscious of what Dangote is selling. Is it hope Dangote did not also buy it from somewhere first before they are selling it? So you need to also look at all those arrangements. Once you are able to understand all those arrangements, then you can determine whether it's applicable or not. However, what they also try to do here is that because the cost of production is high in Nigeria, right? If I do a business, especially people that are into supply of goods and materials like this, the profit line is always thin. The profit line, the margin you can make is very small. Let me give you an instance why they did this. It used to be 5% before. I have a company that let's say you bought a material, you bought manure or whatever you used to produce your goods. You bought a car, a car tire for 50,000 naira. Which example can we use? I'm trying to look at an example that we can use.
Packaging material, you buy packaging material from a manufacturer.
What do you say?
Packaging materials
Okay, packaging material.
from a
Yes.
manufacturer.
So if you look at packaging materials too, it's just a component of the entire product. It's not the entire. That's not the full product that we are going to eventually sell. That packaging is just a part of it. So if, for example, the cost of producing a cup like this now, let's say this cup is worth £5. So let me use naira. Let's say this cup is worth 1,000 naira, right? And to buy raw material that we used to produce this cup, everything I will buy is like 900 naira, right? You know, I said this cup is worth 1,000 naira. All the raw material I will use to produce it, including the cost and everything, is 90 naira. How much profit am I making? Sorry, 1,000 naira, and I'm using 900 naira to produce it. How much profit am I making?
100 naira.
100 naira. That is just like
100
10%.
naira.
Yes, 10% of it. So, but there are instances where the cost that I'm going to incur to produce this cup is like 980 naira. In that case, I'm only making 2% profit. Is that 2%? 2 over 100 is what? Yeah, 2%. So if I make 2% profit on this thing, and you now charge me withholding tax of 5%, It means that by the end of the day, when I'm going to be paying, because don't forget that 2% is my profit. Let's assume that all things being equal, that 2% at the end of the year, my 2% is, let me use a big figure. It will make more sense if I use a big figure for you guys. If my revenue is 100 million naira, my profit is 2%. Somebody should help us get a pen. I would have done Excel, but I want us to practicalize it. If my revenue is 100 million naira, my profit is 2%. How much is that? That's like 2 million, I mean. Any statistician among
Yes, 2
us?
million.
Yeah, 2 million
Mm.
naira.
Yes.
Now, we've made 2 million naira. At the end of the year, when we do our calculation and everything, the company made a loss because the profit we are talking about is still gross profit. We have not talked about other expenses we will incur. So at the end of the day, the company make a loss. CIT payable, 0. But you've already withhold 5% because I was selling to you. You know, when the withholding tax is on the total revenue, not on the profit. It's on the total amount you are selling the item. So when you withhold 5%, meaning that I've already paid 5 million naira as an advance tax to the government. Now, the time to pay CIT comes, I don't even have any CIT to pay because I made a loss. What it simply means is that every year, if I continue to make a loss every year, I'll be having withholding tax credits piling up with the government. And this is happening to a lot of companies in Nigeria currently. I've seen companies that were supposed to pay the CIT. The CIT liability is 2 billion naira. CIT liability is 2 billion naira. And the withholding tax credit they have is about 15 billion naira. Now, the CIT liability, by the time we finish calculating it, when we put capital allowance, the CIT payable is 0. They were having and they were having loss. So minimum tax exposed them that okay, they will now pay under minimum tax, they will still pay tax. Now, under minimum tax, so if they are to use withholding tax credit to offset it, they will still have a lot of billions left in their credit note. So what is simply okay, yeah, thank you. So what this is simply trying to do is that when we now reduce the rate of withholding tax that we are charging the companies, it will help them to have more cash for working capital that they can use. And then when they have any difference in their CIT, it will not be too much. You will not be having huge withholding tax credit that you cannot utilize in the future, right? And you have a reduced withholding tax credit. So do we have other rates? Right? I think that explains those ones that have reduced rate. That's the two. So maybe I'll just allow us to ask question and answer session where you can answer one or two questions before we wrap up. So thank you very much. That's gonna be all. Yeah. I didn't get that. Okay, so I think I can see the question now. That was from Tomini, right? Or I said, how does DCT works for related companies? E.g., a company in Nigeria wants to deduct data from a related party in South Africa. So you need to understand the concept of DTT. DTT is not because of related party. DTT is based on agreement. For people that do not know what DTT means, DTT means double taxation treaty. So there are countries that Nigeria have double taxation treaty with, right? And some of those companies, in fact, recently all those companies and the new agreement were prepared, right? As a last year or last 2 years now. So you might want to go to the website where we have the DTT regulations and the guidelines. You want to see the companies the countries, not company, countries that Nigeria have DTT with, and what are the rates that are specified for each of those countries. So it's not about company that you use to determine withholding tax rate. It's about countries, right? So where there's no DTT agreement, then the withholding tax would be the rate specified in the withholding tax regulation.
That was paid in USD, and they did a withholding of their usual 5%. So as of today, we have over close to 100,000 USD as withholding credit, and we've done the filing and every those USD because we did our filing in with NGN. So that's what I'm asking, because the transaction were occurred in USD, were done with USD, and then the filing and everything was done in NGN. But on the tax promise, we still have a tax credit of close to 100,000 USD. So how do we claim those money? Thank you.
I'm not sure I got that. I'm so sorry. I didn't get the. Can you summarize the question so that I can get it? You said you have withholding tax credit somewhere.
Okay, the summary is we have a tax credit USD close to 100,000. How do we
Okay.
claim the money? Because we filed with NGN, and then we had other withholding tax for NGN. You understand? But the NGN own has been sorted out. The USD withholding tax. That's my question.
Okay, I get you now. So because your reporting is done in Naira and your tax liability is also in Naira, right?
Yes, but we have
So
it.
your
We have
withholding tax
we did
available that you can utilize is also in Naira, but you have withholding tax credit that you cannot utilize.
yes.
So I want to quickly ask a follow-up question. Transactions that you do, that you issue in the, how come you don't have withholding tax credits in USD?
The job was quoted in USD. You understand? The job
Okay.
was quoted in USD and paid in USD. I don't know if you get the question.
I didn't get that. Come
I
again.
said the
That's
contract
the
was quoted
transaction.
in USD and the payment was done
Duke,
in USD.
or who is talking? I think somebody is talking in the background again.